Joining me now is Sam Lee. Sam Lee is the president, CEO, and you might as well be a director of
I am.
Northisle Copper and Gold. Thanks for joining me on our first episode of the Morning Drive.
Nice to meet you, Carl.
Yeah, and you've got a nice route planned for me.
Yeah, welcome to Vancouver. This is really exciting.
Yeah.
It's a beautiful day here, not too common during the winter time.
And it's a Saturday morning, cough, cough, Saturday afternoon, and we're going to go for a drive and hear more about the company.
Fantastic.
Left or right?
Left.
Left.
Yeah, I'll take you right down South Marin, beautiful landscape of the Fraser River.
Okay, cool. I've never seen that before. So, okay, so let's start with sort of some capital market stuff. Your market cap right now?
It's about $40 million.
$40 million.
Yep.
How many shares are outstanding?
About 200 million.
Any warrants outstanding?
We've just got a very few amount of warrants issued to Michael Gentili and a gentleman named Pierre Baudouin, who we did a private placement with about a year ago, but that's it.
Okay, so you wouldn't say there's a lot of overhang in the stock?
Not through the shares outstanding or the warrants. We have a very solid foundation of, I'd say cornerstone investors.
Okay.
Within one hand, I could speak to about 60% of it, including Michael Gentili, Dale Corman, who owns approximately 11%. Dale's our founding chairman. Dale is probably best known for Peñasquito, selling Peñasquito to Goldcorp, now Newmont, one of Newmont's more prolific mines. Dale just got recently inducted into the Canadian Hall of Fame and is, again, about 11% of our shareholdings. The management team owns approximately 8% beyond that. And then we have a handful of Dale's investors and Michael Gentili's investors that bring us to about 50%.
Okay.
Yeah.
Personally, how much do you own?
So I have 2 million shares that I bought in either private placements or the market, and then I have approximately 8 million shares. So the first year that I worked, I did not take a salary.
Okay.
Took it all on options. I believe in this company. I want to take some risk and certainly some leverage as it relates to the opportunity at hand.
Okay, that's really cool. So you started the first year, like how long ago was that? What was the first year where you took no salary? How long?
2020, I joined in October. So my background's, I'm a metallurgist by training, an engineer. I spent the last 20 years at CIBC. I ran their global mining practice based in Vancouver. So my background is certainly in the mining space. My thesis was a copper gold porphyry. That's our system right as well. I worked on over $100 billion of M&A and financings for similar types of projects such as ours. So I really do know the space. I know that the obviously markets and the cycles ebb and flow through the course of many cycles. I know where we are. I believe we're kind of in the second to third inning of a super cycle for copper, and I know that towards the fifth and ninth innings are when all the fun begins.
Right. So this is a developmental play, but you're still exploring. Is that accurate, or are you done exploring?
Correct. No. We're certainly not done exploring. Perhaps stepping back a little bit in terms of that condition of the market and what we're seeing today. We are clearly going through a systemic shift around the electrification and decarbonization of this world, right? And so what drove the cycle circa 2001 to 2011 was Chinese demand, Chinese urbanization, people coming from at the outskirts going into the cities and having the SOEs, Chinese government, really driving that level of demand for copper. What's happening now is, China demand is reduced from about 11.5% to 4-5%. We're obviously seeing significant demand coming from China still because it's obviously off of a much bigger base. But the real thesis and narrative that is driving copper today is 100% electrification. So to put that in perspective, if we want to establish ourselves as a world that doesn't increase more than 1.5% aspirational goals by 2050, we will need to spend $1.2 trillion on critical metals. Of that $1.2 trillion, $750 billion needs to be spent on copper projects. Now, there aren't that many copper projects that exist today, certainly in Wood Mackenzie's database. So this is where all the numbers are coming from. So from our perspective, it's not a matter of if not, but when. It's not a matter of which projects, but it's a matter of projects that are clearly economical in reasonable price environments, but also have that social license to be able to advance within a reasonable period of time. Wood Mackenzie is calling between a 6 to 8 million ton deficit in copper by 2030. That's in 7 years. To put that in context, that's approximately 7 to 8 of the largest projects that need to be in production within this decade. It's not possible because those projects have not been found yet, and if they had, they will probably take about 15 years to develop. So we are coming into that perfect storm where copper is going to be the commodity that everyone's looking for.
Yeah. Well, I listen to a lot of debates on critical metals, and people challenge each other, but
sure.
Copper, I don't think many people would disagree with what you said. There's not much of an argument, to be honest with you.
Yep.
Right? You need copper to electrify the world.
Correct.
So that's that. The price of copper has jumped a little bit, I think, as China has lifted some of their restrictions. Is that accurate?
Yes, copper has increased quite a bit over the last couple of weeks. But that's just kind of near-term supply, demand, inventory squeezes, obviously the disruption that we're seeing in Peru, in Panama. But that is a really important theme, right? So I think that, yes, you're right. Everybody believes that the copper narrative is true. But the question then becomes, where is this copper going to come from, right? And so historically, Canada, British Columbia, which is where our project is a copper gold porphyry in British Columbia, approximately 5 billion pounds of copper equivalent in our indicated resources. That yields about, according to our preliminary economic assessment, that yields about 100,000 ounces of gold, which is a byproduct a year, but more importantly, about 100 billion pounds of copper a year for 22 years. So this doesn't solve the problem, but it is certainly a material part of the solution to this world that needs more copper. But then if you think about it, that $750 billion of spend that needs to happen in order to get to our climate goals, there aren't enough projects in the world. And within that database of projects, I'd say over half of them will never get developed because they don't have the social license, they don't have the infrastructure, they don't have the abilities, these driving factors that are able to develop projects quickly. Now, we're in British Columbia, and I think the theme in British Columbia has always been, and rightfully so, has been sustainable, low-risk ESG development. And so what does that mean? Well, that means that we go through permitting processes that are rigorous, that are obviously well thought out, that take time, but you have assurance that the project is going to actually go ahead as planned once you get those permits. And in British Columbia specifically, it really is driven off of that social license, Indigenous relationships with our First Nation partners. And so what is happening is the world is looking to British Columbia and Canada as to how to establish those types of frameworks to get these types of social license that are being very disruptive in areas, as I mentioned, in Peru, in Chile, and other parts of South America. So, what I suspect, and, what is happening, certainly in Canada, as evidenced by Canada's critical metal strategy that was just announced in December, is that countries are going to look at the sanctioning process for critical metals, such as our project, to reduce that timeline, because clearly in order to get to 8 to 10 million tons by 2030, you will need a more expedited timeline. And that's exactly what the Government of Canada has proposed as part of their December 2022 critical metal strategy. I was just at a conference, the TD conference, just 2 days ago. Minister Wilkinson, Minister of Natural Resources, outlined the plan of this initiative, of this strategy in Canada. He's earmarked initially $4 billion to advance critical metal projects in Canada. Critical metals defined by, I think, 29 critical metals, but he's focused on the 6 critical metals, copper being one of the most important of those 6. And he's obviously identified areas, or the group has identified areas where there is the greatest bottleneck, which is essentially permitting and financing these critical metal projects into production. Yeah. So this is all a very, very positive, advancement that identifies projects like ours within safe, low ESG jurisdictions to come into production on an expedited basis.
Well, that's nothing to be exciting about, Sam. That's a lot of good stuff looking for the company. You know, it does seem like the government is teeing this up on a platter.
Correct.
You know, because I remember if I was interviewing you 3 years ago, you didn't have any of these bullets in your chamber, my friend. So
I agree.
Let's talk about the project.
Yeah.
Let's talk about infrastructure. Do you have good infrastructure? If so, why? Take me through it.
Sure. So if you then converge and triangulate on low ESG jurisdictions like British Columbia, you don't come up with very many opportunities. And so our opportunity, as I mentioned, the way I would categorize is it's an intermediate sized copper project, intermediate capital intensity copper project with a massive gold credit. Okay, so 100 million pounds of copper production for 22 years. In all respects, is an intermediate copper project. But as I said before, you will need incremental production coming from everything from recycling, technological disruption, from smaller, bigger projects alike to solve this problem of this looming deficit that we're coming up against. The project, and from my perspective as well, when you look at projects across the world, the companies, majors, incumbents alike, are looking at smaller capital intensity projects, but multiple projects around the world. We're also very relevant because of our gold byproduct. That 100,000 ounces of gold production, of recoverable gold production a year for 22 years, as defined by our preliminary economic study, is extremely attractive as it relates to the momentum that we're seeing within the industry of gold companies taking out copper projects and being more copper gold agnostic. So the largest gold companies in the world have now stated that they're going after a more evenly distributed copper gold profile. So yeah, I just think that copper has just become more relevant and relevant. And as I said, the incremental buyer now seems to be gold companies to obviously go after longer dated projects, longer life of mine projects, and then certainly copper projects that have gold in them, like ours, is exceedingly attractive. Our revenue distribution is approximately 60% copper and approximately 30% gold, and the rest is molybdenum and a very strategic metal called rhenium.
Rhenium?
Yeah.
Okay, so tell me about that last, did you say rhenium?
Rhenium, yeah.
Rhenium. What's rhenium used in? So
rhenium is a high, it's used in high temperature applications, so aerospace, airplanes, et cetera, It's, we've got one of the more sizable rhenium deposits in the world. It's an element that really does ebbs and flow with these types of applications. So during COVID, during the crisis, we saw rhenium prices hit around $13.50 per kilo, which is what we used in our preliminary economic assessment. Fair enough, we can't win them all. But to put things in context, when BHP, which owns the Island Copper Mine just 25 kilometers north of us, sold their concentrate and received the rhenium prices extended to over $10,000 a kilo. So that's a 10x in terms of revenue if you're able to obviously time it correctly. So rhenium is a very important byproduct. Moly is a very important byproduct. Our PEA used $10 moly. Moly's at $30 today. Our PEA used $3.25 copper prices. Copper prices are $1 higher today.
Yeah, I was going to ask you what prices they would have PEA.
Right, so every 25-cent movement in copper prices increases the project PEA, which is approximately 1.1 billion Canadian, $300 million, every incremental movement.
So what are you trading at in your NAV?
Yeah, so we're covered by 3 analysts. Based on analyst consensus, we're trading at a 0.05%, so 5% of our net asset value, and based on our PEA, we're trading at lower than that, about 0.03 times. It's very interesting. So where we're located is in Port Hardy on the island, right? So we're not that far. We're about an hour away flight from Port Hardy. You asked about infrastructure.
Right.
And so Port Hardy was essentially built by BHP. There was only 700 people at Port Hardy before BHP started their copper and gold mine back in the 70s. And now it's probably closer to a couple of thousand. So BHP used Port Hardy as their epicenter for their indirect and direct workers, so approximately 3,000 workers. That's only about a 25-minute drive from our property along paved roads. And so infrastructure, you've got 2 substations, one in Port Hardy, one in the BHP Island Copper Mine, within about 7 kilometers from our project. So we've got access to clean power, renewable power. You even see, you comment the convertibles here in the charging stations all over the place in Vancouver. We actually have 2 charging stations in Port Hardy. Like, it's a very well set up town for people to live in, and obviously with labor being extremely difficult to procure now, everyone wants to actually live in places like Port Hardy when they live at a mine that has a 22-year mine life. We've got one of the largest wind farms to the north of us, the Cape Scott wind farm, which produces about 99 megawatts of power, which gets wheeled into California, probably for double the price. As we know, right now, probably the most precious commodities are energy and water. And so we have excess energy in British Columbia. We certainly have excess energy in our area, obviously with that wind farm wheeling power to California, who are in constant blackouts. And we get about 3 meters of rain a year. So that means that we have access to clean water.
So what's the plan? Like, how much do you have in the bank right now?
Yeah, so we've got about $7 million as of last quarter. So that funds our next exploration program, which I haven't touched on. So the exploration program is twofold, right? We're a junior company, so we need to be judicious on how we spend our capital. And so what we've allocated is for the near surface stuff and the big swing, right? And so the near surface stuff, we've identified approximately an incremental 40 to 50 million tons of higher grade gold zone within the copper porphyry. So what does that mean? Well, our average grade is approximately, gold grade is approximately 0.3 grams per ton. Well, we've been hitting intercepts between 0.8 to 1 gram per ton within this zone. So the expectation, because it's in the porphyry, it's much more, it's very contiguous, it's very predictable, is that we've outlined an envelope of approximately 40-50 million tons of incremental at that grade. So that's significant incremental gold. We already have well over 5 million ounces of gold equivalent. So this is a big porphyry system that we're just scratching the surface on. And this does come to the surface, and as I said, that's something that a company like us can really develop ourselves. The second part of the exploration program is Pemberton Hills. We just released on Monday the thesis on Pemberton Hills. So what we know about Pemberton Hills is it's in between our project and BHP's Island Copper project. It's approximately 7 kilometers away from our project. It's within our 100% owned land tenements. It is a massive system, porphyry system that extends across 6.5 kilometers thick. Wide, 1.5 kilometers long. This is identified through the lithocap, which is obviously top of porphyries. We know that it's tilted, or we have a very high confidence it's tilted, given that we've mapped it out. Every other deposit in the area is tilted, including Island Copper, including Hushima. And we know it's copper mineralized. So we've done drilling. We had a joint venture with Freeport.
Tell us more about that.
Yeah, we had a joint venture with Freeport. We've obviously, when I joined, I capitalized the company. We capitalized the company with a quick $10 million offering. That was during 2020-2021, which was when that Freeport joint venture was set to expire. They obviously wanted to extend it, but it was during a very precarious time in the market. We had just raised the money. It was probably one of the best decisions we made, is to take it back 100% and then advance it to the point where we have today, and then look to advance it either through drilling ourselves. So we've identified the drill targets that we believe will intersect the porphyry at the valley towards the towards the northeast rather. And again, because it's tilted, there's the belief that we can intersect the source of the porphyry at a more shallower distance. So there's no doubt that this system is deep. It's tilted. So the questions we need to answer through our drill program is how deep is it, and will the grades sustain the level of deepness. So that's something that we again have outlined through a drill program that we're looking to advance in 2023.
Okay, so when it comes to drilling, what's the cost per meter?
Well, that's a really, really good question. So because of the fact that we have access to all this infrastructure, it doesn't translate to lower costs on the project level development perspective, but also translates into exploration costs. So our drilling costs are approximately, this is diamond drilling, all diamond drilling, approximately $450 to about $700 per meter.
So for this year, you know, after New Year's, it's like, what are my goals this year? What are your goals for this company? And if you don't, so two questions.
Yep.
What are your goals for this year?
Yep.
And if you can criticize last year,
yep.
what would you have wanted to do better last
sure.
year?
So I don't think we would criticize our strategy, right? Because in British Columbia, as I said, First Nations is a very important part of the dialogue, and to have consent going into the permitting process really does expedite the timeline in terms of development. And so in 2022, we had identified that this is part of our critical path strategy as it relates to reducing the timeline to permit this project. And we went ahead and we went and executed the agreement with Quetzino. And so as a result, it probably brought a little bit of unpredictability up front as opposed to later on in the process. So that was positive for us, but again, from a market perspective, it was, you know, they want to see drilling, they want to see results. And so that program around defining the 40-50 million tons of Northwest Expo and Pemberton Hills drilling and the permits to be able to achieve that now are well in motion, and we expect to get them early on this year, so we could actually have those results come out within this year. So the 40-50 million tons of additional resources at Northwest Expo, initiation of a drill program at Pemberton Hills. I didn't talk about the metallurgical program that we initiated last fall around the metallurgy, not only at the project level, but also in this higher grade Northwest Expo zone. So what we know through historical experience is that the higher the gold grades are, the higher the recoveries are. And you know, our copper recovers out quite well. It's close to 90%, but our gold is in and around 50%, right? So that's that 100,000 ounces that I had stated before is based on post recoveries 50%. So if any incremental recoveries we can get just increases that 100,000 ounces a year profile, which is going to be very substantial. So that's what we're working on. Obviously, that's moving towards the pre-feasibility level metallurgy, which is obviously once again critical. And you know, we've obviously have initiated our baseline studies, which contributes to the permitting process and contracts that process as well.
Is there anything that we haven't covered, Sam, that you wanna touch on?
Well, again, I think I just want to, you know, leave off by saying, you know, our belief is that, you know, we see opportunity in difficult markets, right? And a lot of people see, quite frankly, difficulty in opportunistic markets. And this is something that I can't really stress enough. When you look at an entirety of a cycle, there always will be investments that resonate at different points of the cycle. And as I said, we are right on the precipice of what I believe in, and most people believe, is another super cycle. Certainly for critical metals, and certainly for copper being probably the most significant of all those critical metals. And so when you think about those projects that are going to get sanctioned during that period of time, and if you look at the precedents that have occurred over the last 2, 3, 4 cycles from an M&A perspective, the opportunity is not only real, but it's enormous, right? So a project like ours, a copper gold porphyry, 80% of the world's copper productions comes from porphyries, right? They don't come from smaller VMS deposits, they don't come from CRDs, they come from porphyries. And those are the assets that are absolutely in demand towards the middle and to the end of the cycle, right? So that is what I really want to emphasize around patience. Patience in this case is an absolute virtue. We are not fazed by the fact that we have a $1 billion NPV project and we're a $40 million company today, because we know that that condition is going to change, and when it does change, it changes rapidly. Is the fact that the fundamental valuation as defined by our project through the PEA, that opportunity is going to be real when there becomes this risk-on attitude in the market that we're actually slowly starting to see. I'm not sure when you're going to be releasing this video, but this last 2 weeks, certainly in January, has really started to pick up as it relates to equity financings. We've seen probably over $150 million of equity financings for companies nobody's ever heard of, right? So,
yeah, I know a lot of companies that I talked to just before the holidays were all in the middle of financings.
That's right.
A lot of them were oversubscribed.
Right.
And this is a very marketable story because of the critical metals, and copper is an easy one to identify. It's not a difficult one for people to understand.
Correct.
You've covered the infrastructure. Where can people get a hold of you? If someone sees this video and they say, okay, I want to talk to Sam myself,
yes,
where can they get a hold of you?
My lines are always open, my emails are always open. You can go to our website. That email address and those phones lead directly into Nick Van Dyke, my CFO, and myself. So I'd love to speak with people. We're obviously on the road for this last couple of weeks and certainly for the next couple of months. Yeah. So we're at VRIC now, which is obviously a part of this initiative. We just got back from TD conference. We were up at CIBC's Whistler conference. The next couple of weeks have us in Whistler for the conference on the 12th to the 14th in February. We'll be at PDAC. We'll be down in Florida towards the end of this month. So there's lots of opportunity for us to catch up. It's really going to be a timely period to have these discussions. To be first on these opportunities could be the difference between a 30 to 50% return versus a 5 to 10x.
Yeah, absolutely. It sounds like a lot of the excitement is ahead of us, which I got into mining when nobody cared, and obviously we had a little bit of a boom from 2018 to now, and then until say 2021-ish, yep. And then it tapered off for macro reasons too, and now there's a lot more excitement that I'm looking at. So thank you very much. If you have some news flow ahead of PDAC, we'll be at PDAC. Maybe we'll talk to you there. Sam.
Carl.
Awesome interview, man. Thanks for taking me on this gorgeous drive that maybe you could see through the rear view, but if not, the audience should come out here and see it. What area are we in again?
We're in Southlands, Dunbar Southlands.
Southlands, all right, cool.
Yep.
All right, that's it for this interview. Get a hold of him if you want to talk to him directly, and like all of their social media handles. Take care.
Thank you.